Good morning, friends. Welcome to Konexio Technical Insights. I am Rahul Randeria. I will be the hosting the show today's show. Today, we would be discussing regarding the setups, the technical patterns in Nifty, Bank Nifty, as well as individual stocks for investments. Last week, we have discussed that at 13,000, which is the psychological mark, we might see Nifty facing some sort of resistance, and we might see some sort of exhaustion at the higher levels. As last week was a truncated week because of Vaidus. Definitely, market went near 13,000 mark, though it didn't cross, failed to cross 13,000 mark, but have seen some sort of profit booking at the higher levels, and again closed with a hanging man pattern on the weekly charts. You will see on the screen how Nifty rallied significantly in the last couple of months, and yes, on the screen what we have seen in the red circle, what we have seen that last weekly candle was a hanging man pattern, which is a red candle. RSI just touching its major resistance area, which is the overbought setup on the weekly charts. It is a hanging man pattern. Such type of patterns are called the trend reversal patterns or topping out formation patterns. So definitely the high of that particular candle or 13,000, which is a psychological mark, would remain the trend deciding level for the coming weeks. So definitely one needs to be highly cautious at these levels, try to book profits and trade cautiously with strict stop losses. Now, we would like to discuss the stop loss or crucial supports and resistance in the Nifty. On the downside, the important support in the Nifty are placed at 12,703. If it breaks, the next support is coming around 12,607. Then the final support for the week is coming around 12,571. These are the spot levels. On the upside, the major resistance which are placed around are 12,963. If it breaks, then next level would be 13,013. If it breaks and closes above those levels, then 13,113. These are the levels on the upside. So definitely at hanging man pattern on the weekly charts, one needs to be cautious. Try to book profits at the higher levels and trade with the strict stop losses. Now I would like to discuss about Bank Nifty. Bank Nifty has been moving in an upward rising channel, and if we see on the daily charts, as you will see on the screen, Bank Nifty has been facing a strong resistance around the resistance line on the upward rising channel. A couple of times it has tested those levels in the recent past from March 2020 levels. It has come down, and again for the fourth time it has again retested those levels. After testing the resistance levels, Bank Nifty has been consolidating, and as you can see on the RSI front, it is still showing some sort of slight negative divergence where prices were making higher tops, higher bottoms, and RSI was making lower tops. Again, Bank Nifty facing resistance at the upward rising channel. Definitely, some sort of profit booking was seen. Last Friday, we have seen some sort of fag buying in Bank Nifty, but again, at the higher levels, we need to be cautious. Uh, so one needs to be trading with strict stop losses. So again, RSI also into overbought territory. Bank Nifty, Bank Nifty again facing resistance. So I would be cautioning at these levels. So now I would be discussing the strict supports and resistance in Bank Nifty. So on the support side, the major support is seen around 28,580. Next support level is the psychological level, which is 28,000. And below that, the final support for the week is around 27,703. These are the spots level in Bank Nifty. On the upside, the major resistance are placed at 29,627. If it breaks, then 29,784. And above that, the psychological mark, which is 30,000. So these are the crucial levels where traders need to watch out and trade accordingly. Now, I would like to discuss on the derivatives setup, where the strong open interest has been built in on the call side or the put side. So now we will discuss on Nifty. On Nifty, the strong position has been built in the strike price on the Nifty calls are placed at 12,800, 12,900, and 13,000. As you can see on the screen, definitely these are the levels where the strong open interest has been built. So 13,000 seems to be a major resistance area. So I feel that for the current week, 13,000 would be the trend deciding level. Only follow up buying only would be seen if Nifty breaks above 13,000 levels on the upside, which seems to be quite uh, a stiff resistance. So one need to be watch out for those levels. Now on the put side, where the strong open interest has been built, the strike price are again 12,800 put, 12,700 put, 12,600 put, and 12,500 put. As you can see, the strong open interest has been built on the put side. So now for the Nifty, the major range is coming around 13,000 on the upside and 12,500 on the downside. So this is the range where Nifty would trade. So overall, the strategy would be sell on rallies, book profit at the higher levels. Now in Bank Nifty, the major position where the position has been built in the Nifty Bank Nifty calls are 29,500 and 30,000. As you can see on the screen, these are the strong area where the position has been built. So this could act 30,000 could act as a stiff resistance on the upside. So these are the levels in the Bank Nifty calls. Now on the Bank Nifty puts, the major position which are built around are 29,000, then 28,500 and 28,000. So this is a range where the major position has been built in the strike price: 29,000, 24,500, and 28,500 and 28,000. So these are the levels where traders need to watch and trade accordingly with strict stop losses, because again, next week is last week of the expiry, so it would be highly volatile. Wild swings could be seen on Nifty and Bank Nifty because of the rollover of the position from November series to December series. So I would again recommend to trade with strict stop losses. The market would remain highly volatile. We might see the wild swings on both the side, on the upside and the downside. So trade strictly with strict stop losses. Now the final segment for the day is the long-term investment call. I have identified one call in the mid-cap segment where the stock seems to be potential for the long-term investment. The stock is Goa Carbons. On the daily charts, the stock has given a flag pattern breakout, uh, supported with substantial volumes. Support with substantial volumes, as you can see on the charts. The stock is on the verge of a breakout. Friday it has given a breakout, but just closed below the breakout point. It is a flag pattern. The volumes are very high. The closing price of the stock is around 254. So maybe any correction, maybe around if we might see some sort of cool off, maybe around 240 or 230, or even at these levels one can accumulate. But if it comes around 230, that would be again a strong area where one can accumulate for the long term. So definitely Goa Carbon is looking promising for long term investment. The upside long term target is 350. So overall, from 254 to 230, that is the area where one can accumulate for the long term investment in Goa Carbon. On the upside, the long term target for minimum 12-month investment horizon is 350. So these were the stock long term investment where one can look out for at current levels and on corrections. So thank you very much for watching the show. Any comments you can give in the comment box. For live update in Nifty, Bank Nifty calls or individual stocks, you can connect me on my Twitter handle, which is @Rahul Randeria. So thank you very much for watching the show and have a happy trading week. Thank you.